The stock market rally gains strength as earnings please and Ebola fears ease. In today's cover story, oil prices are dropping while airline profits fly high. And conscious coupling, why more singles in America may be choosing money over love. Plus, is Apple about to revolutionize how we check out? First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Tuesday, October 21st. In today's First Look, big blue bounce. IBM held the Dow down for most of the session, but as the selling slowed in IBM, the blue chips made a 20-point gain, the NASDAQ 58 and the S&P 500 17. Apple bakes in profits. Apple shares gained more than 1% after the close as the tech company topped estimates, revealing it sold 39.2 million iPhones. And the Wall Street Journal reports Yahoo is expected to outline cost-cutting efforts in today's earnings report. In Trader Talk on this Tuesday morning, Bob Iacchino of Tethys Partners joins us now. Bob, there was a turnaround in the market yesterday. Is that enough reason for investors who are along this market to become excited?
No, it's not. I wish it was. The interesting thing about it is the couple of days we've had up in a row are good. That's the way the market's going to recover. It's going to grind back up, shake off a lot of the fears that it's had in that violent sell-off. Understand that that was the correction and then sort of grind back up. The issue with it is that bad news is really exaggerated when you have volatility and sort of a market tone like we have right now. So we really need some good outperformance. Chipotle Grill yesterday didn't really give that. We'll see what Apple has to do with the market. IBM didn't give us that. Took the Dow down by about 80 points more than it should have been. It's a good thing what happened yesterday, but it's not enough in this sort of tone.
Turning to oil now, oil supply is making a big splash, but have we found the bottom yet in those oil futures?
We have not found the bottom yet. In my opinion, it's going to be somewhere around 75. I think there's a lot to do with the moves that OPEC is making, where the major OPEC obviously is Saudi Arabia. There's other nations in there, but they dominate it, and they're not cutting back production at all. As a matter of fact, last year they increased production. So I think OPEC is deciding to have Russia right in their sights, get Russia out of China, grab some market share. In the meantime, shale oil in the U.S. is going to continue to flow at these numbers. So I think at about 75 is where you'll see it. A rally like this, very similar to the rally in the equities. Very normal, but will probably be sold into in oil as well.
Thank you, Bob.
Thank you.
Apple topped on earnings after the close. James O'Malley of Option Hacker joins us now. James, what's your take?
Right, so this is exactly what the longs and Apple wanted to see happen here. They beat on top and bottom line, and they sold more iPhones than expected. They were implying that the stock can move as much as $4 by this Friday's expiration. It hasn't moved quite that much yet, but if buyers are convinced and they like the guidance as well, I think the stock could easily get to those levels.
What's your trade on the day?
So I actually went into the earnings report flat. I knew that it was going to be very important to see what those iPhone numbers were, but I wasn't so sure about guidance. I thought that if they guided weak or not as strong as people expected them to, the stock could easily sell off. So for me here, the best trade was no trade.
Thank you for coming on the show today, James. Chuck Coppola joins me now with a look at more news headlines. Good morning, Chuck.
Good morning, Angie. In today's cover story, oil slide more than 20% within the last few months to under $83 a barrel. What it means for drillers, investors, and airline executives who monitor crude oil prices' effect on jet fuel. So far, there may be more winners than you think. The CEO of Breitling Energy, a Dallas-based oil and natural gas company, says recent price drops are not enough to lead drillers to hit the panic button yet. But the panic button number is in sight.
The number that troubles me, that keeps me up at night, is 70. If oil was to get to 70 and stay there for any long period of time, rigs in this country will lay down. Producers will have to make the hard decision to keep oil in the ground.
Faulkner credits fracking for increasing oil output and helping to keep low prices at the pump, which fell for the 18th straight day, according to the American Automobile Association, to nationwide averages of $3.10 for a gallon of regular, up to $3.50 for premium. Technical traders say $80 a barrel is a key threshold, but some say retail investors would be wise to wait before rushing out to buy oil stocks.
The caution to the average investor is to not purchase energy stocks right at this moment. Wait until that they bottom out. In trading, we call it do not catch a falling knife. So what I would see is a possibly bottoming out, meaning that it's going to hit a level and then go back about $2-3. It's going to have a continued uptrend. So let it recover about 3 days in a row before you start to buy.
Right now, airlines see the drop in fuel prices as an opportunity that could help earnings and improve competition, which may benefit passengers.
No doubt this will trickle to some extent to the bottom lines, and the airlines are going to see a nice quarterly earning boost because of the fuel price savings. At the same time, it's just so dog-eat-dog out there, even with the shrunk number of carriers, that a lot of that savings get passed on to the consumer. So in a way, it's a win-win.
Schwieterman says lower fuel prices may allow some carriers with older, less fuel-efficient aircraft delay fleet purchases. Another benefit of the oil glut, retail analysts remind us that low gas prices help boost consumer confidence. That's on the wish list of many retailers going into the end-of-year holiday shopping season.
Concerns are growing about airbags made by Japan's Takata Corp. The National Highway Traffic Safety Administration is urgently pleading for 4.7 million people to get their cars fixed. The warnings cover Toyota, Mazda, BMW, Nissan, GM, and Ford. NHTSA says the potentially defective airbags can rupture, causing fragments to fly out when deployed. At least 4 people have been killed. More than 20 million vehicles are equipped with the faulty airbags.
A lot of people, if there's not an immediacy, it's not something I can see, it doesn't smell bad, there's no smoke, it tends to get put by the wayside. I'll take care of it as soon as I get a couple minutes, and then nothing happens and they don't get a couple minutes and they forget about it.
People living in high humidity areas are the most at risk.
After 3 weeks of pro-democracy protests in Hong Kong, students and government officials are set to hold talks. That meeting is scheduled for this evening. Protesters are calling for free elections. China says only pre-approved candidates will be allowed to run in those elections. This evening's talks are not expected to bridge the chasm, but there is hope that there will be an agreement to continue the dialogue.
Encouraging developments are happening concerning the Ebola outbreak. The World Health Organization is declaring Nigeria and Senegal Ebola-free. The 43 Dallas area residents who had contact with Ebola patient Thomas Eric Duncan, who died October 8th, have been also deemed free of the virus. However, CNN reports patient count is down significantly at Texas Health Presbyterian Hospital, where Duncan was treated. Today, an experimental Canadian Ebola vaccine licensed by U.S. firm NewLink Genetics should reach Switzerland, where human trials are likely in the next few weeks.
Talks to create a massive railroad company have fallen through. Shares of CSX and Canadian Pacific both fell in trading yesterday after the companies dropped a proposed $62 billion merger. According to ABC News, Canadian Pacific ended the talks and has no further discussions planned. In a statement, Canadian Pacific cited regulatory concerns.
It's a date. Family Dollar is choosing October 30th as the day for shareholders to vote on whether they want to sell to Dollar Tree. In July, Family Dollar agreed to be acquired by Dollar Tree for $75.50 per share in cash and stock. That translates to $8.5 billion. But the deal is not exactly expected to go smoothly. Dollar General wants Family Dollar for $9.1 billion. Last week, hedge fund Elliott Advisors said it's nominating 7 directors to Family Dollar's board to ensure Family Dollar gives Dollar General a fair shot.
A powerful venture capitalist leaves eBay's board over its decision to spin off PayPal. Marc Andreessen, a Silicon Valley pioneer, tweeted on Monday, "After 6 years and completed decision to split, I've decided now is a good time to step off the eBay board of directors." Andreessen has been engaged in a very public disagreement with activist investor Carl Icahn over the direction of eBay. Icahn has been pushing for the PayPal split. Andreessen referred to Icahn as an evil Captain Kirk.
Sears is becoming a larger landlord as the retailer races to resolve its money woes. Sears Holdings Corp is leasing its prime real estate to trendy clothes retailer Primark. Sears already serves as landlord to Whole Foods and Nordstrom.
In our earnings watch, Halliburton reports a solid quarter. Despite its recent billion-dollar fine connected to the 2010 Deepwater Horizon explosion, the oil field services provider reported higher profit and revenue. Shares rallied 32 cents. Hasbro shares jumped 4% on higher toy sales. Its earnings rose 43% last quarter, and retail data breaches have NCR cutting its guidance. NCR, manufacturer of point-of-sale devices, warns its upcoming earnings report may show weaker sales as retailers shift strategy to protect customers against hack attacks. NCR reports earnings next week.
Economists eye solid but slowing growth for the third and fourth quarters, according to a new survey. 85% of business economists say GDP will expand by more than 2%. Only 77% expected that much of a gain in the last quarterly survey in July. The National Association for Business Economics released the outlook of 46 professional economic forecasters.
More big Hollywood names cut the cord on cable. Lionsgate Entertainment joins CBS and HBO in offering online streaming subscription services directly to consumers. Lionsgate viewers will be able to stream fan hits such as Hunger Games for $6 per month.
A new Candy Crush game has been unwrapped on Facebook. It's called Soda Saga, the sister game to Candy Crush. The game is the latest from King Digital Entertainment. The company has been attempting to diversify its game selection beyond the wildly popular Candy Crush. Wall Street doesn't seem to be playing games. King stock closed down almost 2% yesterday. On the earnings calendar for today, it's Yahoo, Manpower Group, McDonald's, Verizon, Discover, Kimberly-Clark, Lockheed Martin, Coca-Cola, VMware, Harley-Davidson, and Six Flags. On the economic calendar, existing home sales. Still to come, why one money manager says a poor earnings report from IBM is not enough to make him sell shares. Plus, does financial stress have more couples putting off marriage? And after the break, what Apple has that Google doesn't. Apple Pay is underway. Whole Foods is among the 220,000 retail locations starting to accept payments with iPhones.
You just tap the phone and it's done.
Are you concerned about the security of this at all?
Not at all. No, definitely not.
All the major banks and payment networks such as Visa, MasterCard, and American Express are on board. Along with Whole Foods, people with iPhone 6 or 6 Plus will be able to swipe their smartphones to make purchases at McDonald's, Macy's, Walgreens, Panera, and Chevron gas stations. Bill Mahler is here to explain why Apple Pay is likely here to stay.
Well, you are right, Angie. Though Google was first to market with a mobile payment system, everybody thinks that Apple is going to win this game and that Google Wallet will just fade away. Carl Ron, he's the managing director at Innovation Portfolio Partners in Silicon Valley. He's got a book out called The Reciprocity Advantage. Carl, months ago I tried to give Google Wallet an attempt here, but I never even finished setting up the account. It was just so restrictive in what bank I had to use, which merchants were set up to accept it. Is that Google's problem in a nutshell?
Yes, Google's pretty technology-centric, and so they're not leveraging the existing infrastructure to make the change happen.
How about Apple coming to market? It's a market-ready, easy-to-use application, and it has all these partners. Is that its strength?
That's what Apple's been doing since they did the iPod and with the iPhone introduction. Here they're adding Amex, Visa, Bank of America. They're using the infrastructure to make it happen fast.
But they're not necessarily the last name in mobile payment. I know Walmart says it's going to go its own way. It's not going to play with Apple on this.
Yeah, we're at the very beginning of this, and it's good to actually see multiple experiments. Apple is very adaptive. They'll learn from what Walmart does, and in a couple of years, we'll have the answer.
Well, Apple has, 500 million phones that Apple Pay won't work on. It's only going to work on the 6 and the 6 Plus. Are they going to leverage this to sell new phones now?
Absolutely, they're going to sell new phones, but that's not all. They'll allow you to, no doubt, add aftermarket things. I would expect to see Square and Dorsey to come along and immediately do something to enable those old phones.
Well, that's part of Apple's strategy, isn't it, to find good strategic partners?
Absolutely, that's what they've been doing. iPod, they did it with music. With the iPhone, we may love or hate AT&T, but they did that because that allows them to focus on what they do very well, making the new products, and then leverage the existing infrastructure. It's their model.
All right, Carl Ron, thanks so much.
Thank you.
Coming up, why money is at the bottom of why more Americans are saying I don't to marriage, and why some babies born this week are getting a jump start on saving for retirement.
$10,000 newborns are eligible for a baby gift. For all babies that were born yesterday, Voya Financial is giving away free $500 mutual fund investments. It's part of National Save for Retirement Week. Newborns must have an October 20th birthday, and parents must register by December 19th at voya.com/born-to-save.
Wedding bells are ringing for fewer couples. A new study shows people are holding off on getting hitched, and much of it has to do with money. Gemma Allen, partner at family law firm Ladin and Allen, is here to talk more about this study. What was your first blush take?
Well, my first blush take was money is the last taboo. We need to break through it. We need to talk about it. We need to understand it. We need to feel confident about it. Security, everyone wants security.
You often guide people who are going through divorces. So what can we learn from those people who are getting divorced?
What we can learn is that people don't talk about money enough. They don't take responsibility for it in their lives. They may have great jobs where they deal with money, but it's the old shoemaker's children not having shoes. In their personal life, they don't grapple with it, they don't deal with it, they don't acknowledge how important it is. And we need to teach ourselves. It's interesting stuff. It's better than People magazine if you really get into money, but make yourself go there.
How should people financially prepare so they feel comfortable getting married?
Learn, do a budget, just do a little bit about what does it cost me, raise your consciousness. I give people the budget that we use in divorce to use in their personal lives. If they're fighting about money, I say, listen, let's analyze, where are you spending money? What does it mean to you? What are you earning on your money? And it opens the discussion, which people need to do.
There are cases, though, when people are reticent to get married because they have more money than the other person. And it can be the man or the woman, and they decide, no, I don't want to hitch my pony to this person who might drag me down.
You know what? It's a fair question, and you're singing my song because I'm a big advocate of prenuptial agreements and prenuptial agreements for romance, not for failure. They can be a tool for success. But that's part of it is if you say this is the exposure, how much I'll be exposed financially and no more, you can do that in a document. And that discussion gets you talking about, money. Which, again, we talk about everything else, we tweet everything else, and we don't deal with it.
Tougher question. So if fewer people are getting married, that could mean fewer prenups for you.
That could be true, but we do conups too. And when people are living together, the economic consequences can also be dire if they haven't talked through the financial consequences. You know what? It's inescapable. Love and money, they go together.
Conups, you never miss a beat. Good to have you here, Gemma. Come back soon.
I would love to. Thank you.
Still ahead, why yesterday's sell-off in IBM may be making billionaire investor Warren Buffett nervous. Chart Talk is next. Shapiro, president of MWS Capital, is here to talk about Big Blue. IBM, Matt, as you know, was a big drag on the Dow in yesterday's trading session, and you actually own shares of this stock. So what's your plan?
Well, not every money manager makes all the right moves or is in all the right glamorous stocks. And, what can I say? I'm certainly not selling IBM, but, there was nothing really good to say about the entire quarter. Revenues were down in nearly every segment geographically. And, I'm owning IBM for the long-term big picture. And about the only positive I can say from yesterday was that expectations were so low that the stock really didn't go down that much.
I think the worst part of the report was IBM coming out and saying we're not even going to give you any more clarity until January on what's going on because everybody's waiting for this turnaround to happen.
Yes, and I think they kind of made a little bit of a mistake over the past year to say, hey, we're going to do $20, that's our earnings target. They finally had to accept reality and abandon it. And, there's lots of catalysts that can go around here. At a certain point, the pressure on the CEO is going to be tremendous. This is an all-American company, and it's got to be turned around, and they will do it. Now, a little bit of it is something they can't control, which is capital expenditures. People don't realize IBM's not Google, it's not Amazon, it's not Alibaba. It's big installed stuff in major corporations, and what have people been reluctant to do? Well, invest in new stuff and hire new employees. So a lot of it's out of their control. That's why I'm holding on to the stock, because I want to own it for a long time.
Right, and the company did say that they're going to come out with some cost-cutting measures, and we already know that they're selling off on their unprofitable chip unit. You are not alone in losing money here. There's a report that Warren Buffett, who owns a lot of shares, was down about $1 billion at one point yesterday. So you can feel better.
Well, you know, not every part of it, managing money is glamorous, and you got to realize it's not always the go-go stocks you want to own. Sometimes dogs have their own attractions.
Good to have you here. Thank you, man.
You're welcome.
That's it for now. Coming up tomorrow, how tech companies are casting change on this year's midterm elections. Thank you for watching. From all of us at First Business, have a tremendous Tuesday.